What's up, everyone? I'm back again, and today we're going to be talking about another stock. But before I go into stock, please advise hey, man, you need to pay attention and do your own due diligence on stocks before you purchase them. So, I'm going to go over today a stock called Target. It ticker symbol TGT, and I'm going to tell you right now, should you buy the stock because the dividend yield is at 3.28%. I personally, right now, don't think this stock is worth buying. Now, why do I don't think it's worth buying? Well, the 1 year does have a 10% growth. But the 3 year has a 43% drop, and the 5 year has a 71% growth. So the 1 year it looks decent. The 3 year it looks not so good, and the 5 years it looks okay. And it could be all sorts of reasons why. They're estimating it to be 170 in the next 12 months. I don't think that's true. I can't see it being worth 170. And the analyst does say buy it. Now, do I want to buy this stock? Personally, I don't, because they have a lot of bad um bad news about them in recent years about um, children clothing and XYZ. It's just not an indication of for me to buy. And now when I started paying attention, I started noticing investors are leaving it. Like Vanguard sold 1% of their share, State Street sold 5%, and BlackRock sold 1%. They could be adjusting their portfolio, but they're the bigger companies look like they're leaving it for who knows what reason. Maybe they had good earnings. Let's look at the finance. Now, another issue I have is their net profit is very, very small at 3.85%. I would like to see it higher than 3% because I don't feel safe for my dividends if it's that low. We can you can argue about it however you want, but with a net profit of 3.85%, it's not really much wiggle room. If it goes down 5%, then hey, you're in the negative now. And yeah, they constantly been below 7%. And I like to see my net profit around 10% just to give me a more reassurance. Now, I I look at this and see that their operation expense and gross profit has increased. So they do have some increase. So it's not bad. Now, they do pay a 3.28% dividend yield. So they do have a pretty good dividend yield. And the investors do say hold. Now, I don't know if the history on the dividend yield, so I'm going to look up the dividend history on Target to see if they consistently pay and how often they pay. Let's see. So dividend yield is at 3.5, the last one. So it looks like they have been increasing their dividend yield and their payouts. The P ratio is 18.37%. That's kind of high for what I like to see, but let's see what dividend growth is 1.84%. That's not bad for dividend growth, but I kind of try for dividend growth to be in more of the 5 percentile for me, just because of inflation is 3%, and if a dividend growth is 1.84%, then I'm kind of expecting the stock price to go up more. And last year it went up 10%. So if you count the 3%, that year it went up 13% or 14% if you want to be technical with it. So your portfolio or your target pricing would increase 14% if you owned it last year. And what really gets me, it's this really big dip for the last 3 years. It might have rebound and fixed it, but it really is having a issue, and I don't know if it's going to come back up to their high point of 185. So if they expect to be 170 and at the peak it was 260, I don't think this stock is going to recover. I think it's going to flatline in the next 5 to 10 years, and you're really not going to get any growth out of it as you want it to be. So yeah, I think it's a good dividend stock to hold if you're trying to get a 7-8% return year over year. But I'm not looking for 7 to 8% dividend stock growth portfolio. I'm looking for more of a 14-15%, and that's why I'm a little more picky on my stocks. I want to look at a stock to get not the average like the S&P. I want to try to beat the S&P, and based off the finance of this, I don't see it growing as how I would want it. Because if I was an owner and I'm only making 3% profit on my money, I don't really know what I'm doing with my money, because I would want to make a 10 or 15% return on my input of my cash. So if I put $10, I would want $13 back, right? Because you want to have a 30% gain on your money, and this is only getting 3.85%. Now, you don't need to have a high return, but for a big corporation like this, I would want a bigger return to make me feel my dividend portfolio to be safer. So I wouldn't recommend buying it if you're trying to look for a good dividend growth stock. Now, it is a good dividend stock, don't get me wrong, but I don't think it's a good dividend growth stock, which is what my requirement for my portfolio. So please like and subscribe to my video. That's all I got for this. I don't think Target's work for my portfolio, but I do think there are a good dividend stock. And I do think you should buy some if you're looking for a nice, safe dividend stock. All right. Thank you. And like and subscribe to my video.